Hi everyone, welcome to Investing Club. In this video, I'll show you 3 stocks that are likely to go up during a stock market crash. A quick note before we start the video, I am not a financial advisor and you should not consider this financial advice. You should always do your own research and consult your financial advisor before buying or selling any stock. And I am not recommending any of these stocks to buy, I'm simply presenting them to you as ideas for further research. If you like what you see in this video, the next step would be to research these companies further before making a decision to buy. And a quick announcement, I want to start a new series for this channel where I analyze stocks that my subscribers want me to take a look at. So comment a stock down below that you want me to take a look at, and the 3 stocks with the most amount of likes, I will make a video analyzing those 3 stocks. Now before we start the video, go ahead and hit the like button. You know this video is going to be good, so you might as well just do it now. Okay, and let's get to the stocks. The first stock is Altisource Portfolio Solutions, ticker symbol ASPS. And this one is a stock I made a video about recently, and so I will put a card up to it right now. And you should definitely watch that video first for a full analysis on this stock. But just for a brief summary, this company is a foreclosure services provider. So this company pretty much does everything related to the foreclosure process. And so of course, when the economy does bad, foreclosures are likely to go up. And in that case, this company would benefit and would make more money as a result of having more foreclosures to service. When I made my first video about this stock, it was at around $10. And since then, it has just gone straight up and now it's over $15. So this stock has been up over 50% in less than a week. And so I did buy some for my portfolio and I'm looking to add more, but before I buy more, I'm looking for some sort of pullback. You know, will it happen? It might not, but this stock has just been going up like crazy in the past couple of days. Now we can pull up fast graphs just to take a look at what this stock did during the last recession, which was 2008. And of course, the 2008 recession was mostly due to real estate. And so of course, this company benefited hugely. And from 2009 to 2013, the orange line represents the earnings of this company. And so their earnings went through the roof during this time period and the stock price followed. In 2009, this was a $13 stock. And then by 2013, it was at $160. So this is a company that over 10x during the last recession. And another thing to note is that this company has been doing stock buybacks like crazy. And they only have half the amount of shares outstanding that they had back in 2008. So even in a situation where we don't see as many foreclosures as in 2008, even if we only have half the amount, then this company would likely have an equivalent earnings per share just because they only have half the amount of shares now. Now, something I didn't mention about this stock in my video on it was the insider buying that's going on. So this is for the past, since October 2019, there have been no selling. It has been all insider buying, which is a great thing to see. And especially if you look at from March 12th onwards, it's been constant insider buying from this management company that is a 10% owner. And so when you see this, management is very confident in the stock price going up. And I think they're right to feel that way. You know, in March, we saw the stock drop even though it should have been going up. So I think now the market's starting to realize that this is a stock that actually thrives in recessions. And the management was definitely taking advantage of those temporary low prices by buying. You know, just a great thing to see. Even since last year, there's been no insider selling, which is a very encouraging sign. So again, if you want to learn more about the stock, be sure to watch my full video. It'll be the first link down in the description. And a lot of you already watched my video on that stock, so now let's get to stock number 2. Second stock is Annaly Capital Management, ticker NLY, and they are a REIT that invests in mortgage-backed securities. Now, the unique thing about this company, they invest in government-backed mortgages, specifically mortgages by Fannie Mae and Freddie Mac. And because of this, they have an extra sense of security that the mortgages that this company invests in won't be defaulted on because they're backed by the government. Their price to tangible book value is currently under a 1, which makes them very attractively priced. And from this graphic, you can see that this company actually does better when interest rates fall, which is going on right now. Interest rates are at 0 practically. And so you can see from this graphic what they earn on the spread actually increases when interest rates fall. So that is a very positive thing for this company. They are currently paying a huge dividend. It is currently 15%. Now we can take a look at fast graphs to see how well their earnings cover that. So the white line on this graph represents the dividend and it is consistently lined up with the earnings. So this is a company that usually pays out 100% of their earnings. Now that being said, their earnings are about the same as the dividend this year. So will they cut their dividend? They might not. But either way, it's safe to assume that if they did cut their dividend, it probably wouldn't be a full cut. It would probably just be reduced and that they would resume the dividend at some point in the future. Now, just to see how this company performed during the last 2 recessions, it performed very well. Even the dot-com bubble recession, we saw that earnings jumped during that time and the price went from $10 all the way to $20. So this company doubled during the dot-com bubble when it crashed. And again, in 2005, this company was $10 again, and in 2007, it was at $20. So this is a company that has doubled during the last two recessions. That is a factor of the government-backed securities that this company invests in, and the fact that during recession, interest rates are usually slashed, and so this company benefits from that. The last stock in this video is Universal Technical Institute, ticker symbol UTI. And Universal Technical Institute is the leading post-secondary trade school in the United States, and it specializes in producing automotive technicians, diesel technicians, and motorcycle repair technicians. And this one is definitely interesting. I've seen a couple commercials for the school on TV. I'm sure you have too at some point. So it is somewhat familiar to me. First things that jump out to me is this company has no debt, which is extremely appealing at a time like this. You know, I think right now it's definitely important to place a high priority on companies with a low amount, if not zero debt. This company is also valued at under a 10 price to free cash flow ratio, which again is what I like to look at when buying stocks at a discount. And the earnings are expected to grow at 25% over the next 5 years, so this is a fast grower. And so what happened with this company was a lot of this school's competitors actually went out of business due to the government cracking down on for-profit universities. And so other schools similar to this, such as Corinthian College and ITT Tech, were major competitors to this company, and they are no longer in business. And this is a countercyclical play because the enrollment to a technical school like this is expected to rise when times aren't good. Whether it's because kids can't afford to go to college or there's no jobs in the degrees they went for, there will likely always be a strong demand for automotive technicians. It's reasonable to expect an increase in enrollment for a school like this. And this is the leading company in this industry. They have more market share than their three closest competitors combined. So it's really not even close. When you think of trade schools, UTI is usually the first school that most people think of. And that is a form of a moat, right? That brand recognition. Graduating from the school does have a good chance at landing you a job. They have an 84% employment rate, and the top automotive manufacturers in the world, such as Ford, GM, Honda, and BMW, and Mercedes, rely on this school to produce the auto technicians to work for them. And the management tells us, based on the industry estimates, 100,000 new technicians will be needed every year for the next 6 years. And in 2017, there were only 50,000 auto and diesel graduates. So we are likely going to see a huge demand for these services, which will result in more people going to the school. And a few downsides on this company, we're taking a look at Fastgraphs, is their earnings have been decreasing for the past 4 to 5 years, and this is just because of the economic expansion that we've seen during the past decade. We've been in good times, and in good times there's less of a demand for a school like this. But they are expected to be profitable this year, which is a good sign for the company, and it really shows that they are starting to make a turnaround from where they were a few years ago. In addition, you can see during 2008, their earnings went from 32 cents a share to $1.18 a share by 2010. So this is a company whose earnings over tripled during the recession, and their stock price went from $11 to $25. So again, this looks like a solid company, and all three of the stocks in this video have a potential to go up from here, especially when they were all sold off heavily in March. It really gave investors an opportunity to buy in at rock bottom prices. And as we saw in the case with ASPS, it's already starting to go back up as more investors realize what the real potential of these stocks are in an environment like this. So those are the three stocks in this video. Let me know in the comments if you like any of them and if you're going to take a closer look at any of them. So with that, everyone take care, and I'll see you on the next video.